benchmarks, your Nifty Bank, Nifty index as well, Nifty-50 that is, they're sub their 50 DMAs. So clearly it's quite a testing period in an otherwise intact bull market. Like we were saying, the easy part of the bull market is over, now comes the tough one.
See, all bull markets, they go through corrective phases. We must recognize that. I mean, you have to recognize that is the nature of the market. Excesses got created and the excesses in a sense, unfortunately, are getting completely weeded out. So I would call yesterday's price action as just a day of all-round weakness. It was not like a scary sell-off in mid-caps. It was not a scary sell-off in small-cap stocks, but the grind down continues. The corrective phase in the bull market has started, one. Second, the ability of this market to generate any kind of indecisive bounce, I think is also something which is likely to weigh heavy. And third is that you're falling when others are not falling. Whether it is European markets, other emerging markets, or even for that matter, US markets. So you are underperforming by quite a stark margin now, which is evident in that graph. I mean, just look at Japan and look at India. 12% change, S&P 9, Nasdaq, which was a performing market for 2023, is up 8%, and you are flat for the year. I'm not even getting into small and mid-cap stocks. So optically, this is one large market, which is India, which has now started underperforming. Is this a bout of profit booking, technical factors, or generally mean reversion, which I think is happening because of excesses in the market? I would go for the third point. This is typical mean reversion. The bull market will test you. The bull market, in a sense, is something which will see periodic corrections, and we are going through what could be called as a ugly corrective phase. I will not define this as anything more, anything less. The problem is that when it hits you, and when it hits you for a few days, and when NAV gets knocked out, it will have an impact in terms of how you feel about the market. See, I said it's very simple. If you bought a stock at 100 rupees, it went to 500. You're very happy and excited. But when 500 becomes 400, you said, I've lost 100 rupees, without realizing that 100 is still 400.
100 was your initial capital. Yeah.
So we're going through that phase of the market in the small cap index, where you're still in the money, but the fact that you've lost from the top, it's hurting you.
Yeah, and that's really played out, at least so far in the month of March, as we've seen gone by in the kind of sessions that we've witnessed. And in terms of the big contributors, it's been RIL, ICICI Bank, Tata Motors and Bharti Airtel. Yes, we've underperformed the rest of the globe, as Nikunj highlighted, but the other top factor that we will be tracking today in particular is going to be what happens with respect to the FOMC meet. And the expectation is that the Fed is broadly going to keep the rates unchanged in conclusion of its policy meet, and the dot plot is going to be the focal point.
Yeah, see, nobody is expecting anything very powerful from the Fed, because this is not that meeting where they are likely to pivot or they are likely to come up with anything which markets are really anticipating. I mean, the whole excitement or the whole suspense ahead of the FOMC meeting this time around is just not there. This is not one of those turning points in terms of where you would say that, okay, depending on what you're likely to hear from US Fed tonight, we are likely to see the next 5% on the markets. So from a communication standpoint, until unless they look at some new data point which markets are not aware of, or they change their inflation or their growth outlook, considering that there's a US election cycle, commodity prices are coming higher, I think it pretty much would be status quo. So I don't think it will have a collateral damage per se on the market per se, both in terms of emerging markets or in terms of what you could see in terms of flows. So it will come and go without having a disruptive impact until unless there are few data points which they recognize or which they share, which in a sense markets are not really aware of. That's my point.
Okay, that's what to expect from the Fed. But today is a big day. We've got none other than Praveer Sinha joining in as guest editor. And what better sector right now to focus in on than power?
Yeah, I mean, this in a sense is like the most exciting sector, if you frankly ask me. It's a difficult sector to understand, unlike FMCG or unlike autos, which are easy sectors to understand. Power is a very difficult sector to understand, but this is one sector where monumental changes have happened, where there seems to be a complete change both in terms of policy and in terms of the private sector investment. This is one sector which is going through massive amount of energy transmission. So Tata Power just fits up right there in terms of generation, moving in solar, distribution, They are not expanding in thermal. They're expanding a lot in the entire EV charging space. They've got international presence. The problem of Mundra is behind us. The stock has done exceedingly well, and not just him, the chairman of IDA. We will get you more industry voices to understand that what are the 3-4 factors which could be at play in the power sector. And then if you're planning to invest, how can you really learn from this entire sector per se? So this is really guest editor Praveer Sinha in conversation with ET Now and in conversation with Mr. Das, Mrs. Shukla, and then Karthik Ganeshan of CEEW.
If you like this video, then like, share and subscribe to ET Now.